Good afternoon, this is Sean Golding with Golding & Golding, here to discuss IRS Form 3520 and how to report gifts, inheritance, and certain trust transactions from a foreign person. So, to begin, Form 3520 is a very important form. The reason for that is because unlike many of the other forms, the penalties for not filing Form 3520 are wild. If someone is an individual, for example, they receive a gift of $1 million from their parents, they don't file the form, they could be looking at a $250,000 penalty, even though they have no unreported income, no FBAR, no FATCA, nothing like that. So Form 3520 is required for U.S. persons who receive a gift or certain trust transactions with a foreign person, foreign trust. One very important aspect of that is it doesn't have to be foreign property, but it has to be from a foreign person. So for example, if a foreign person was to gift $500,000 to a U.S. person, then Form 3520 would be required. Whether that money is already in the U.S. or outside of the U.S. is not necessarily a deciding factor. So Form 3520 is used to report gifts, trusts, and inheritance. When it's a gift, if it is from a foreign individual, it's reported if the value of the gift is up more than $100,000. It could be one gift. Let's just use your parents because they love you and they have a lot of money, right? Let's say it's a gift of $170,000. Well, that's reportable, right? Because you're over the $100,000 mark. Likewise, if it's 10 gifts of $12,000, that's $120,000 from the same person in 1 year. That's reportable as well. When it comes to businesses, it's a little different. If you receive a gift from a foreign business, it's somewhere around $16,388 or $888. You have to report it as well. So it's a much lower threshold. In addition, inheritance is a type of gift, right? So if you receive an inheritance from a foreign person and that inheritance exceeds those thresholds, then you would have to file it as well. Certain trust transactions are also required in addition to Form 3520A. The specifics are beyond the scope of this introductory presentation. We'll have a separate presentation for the trust distributions and ownership, beneficiary statements, and things like that. So, in order to file the Form 3520, it's filed at the same time your tax return is due. Even if you don't have to file a tax return, this is where a lot of people understandably get tripped up. So you have no income, you just graduated from medical school or dental school or some sort of school, and your parents want to give you a gift. So they send you over some money so you could put a down payment on a house or purchase a small condo, something along those lines. You don't have any income, so it wouldn't go on your 1040, but the Form 3520 is due anyway. Real quick as a side, the Form 3520A, which is specifically for foreign trust reporting, has a different due date, normally 2 months and 15 days in accordance with the trust filing. It may be the same depending on what the tax year is for the trust, but generally it's due March 15th, and then to file an extension, you file that on Form 7004. If you're going to file an extension for your tax return for Form 3520, like I said, your 3520 requirement will go on extension as well. If you don't have to file a tax return, you'd still want to file the extension just to be safe as to your 3520 requirement if you don't think you're going to get it done in time. Penalties for Form 3520 are pretty tough. When dealing with gifts, it generally tends to be 25% value of the gift. So if you receive a gift from a foreign person of $800,000, you would get a penalty of $200,000 normally. That penalty is by way of normally it's by way of a CP15 notice, and it's very important when you receive that notice that you look at the date, because it's a hard 30 days normally to respond. If you miss the threshold, you got to try to the threshold for responding, reasonable cause, things of that nature. You may have an out, but it's not really something that you want to. It's going to make your life way more difficult, so you want to make sure you respond. If you happen to have received a gift that's a foreign account, a foreign business ownership, things of that nature, you may have other reporting requirements as well, such as the FBAR if it's foreign accounts, Form 5471 or 8865 if it's a foreign corporation or partnership. Form 8938 is a very common form. That's the FATCA form for individuals, trusts, estates, entities in the U.S., etc., outside of the U.S., just not FFIs. But the 8938 is only filed when you file your tax return. So if you receive foreign accounts as part of an inheritance, you may have a 3520 and an FBAR requirement and still not required at all to file your tax return because you don't have any income, right? If you have not filed it timely, okay, you may consider doing a reasonable cost statement, but it is not something to just slap together. Oftentimes someone will come to us that is CPA or an enrolled agent, just a tax preparer. They didn't know they had to file the 3520, so they want to go back and get in compliance, but then the preparer reads about the penalties and understandably gets freaked out and shoots off, a half-page reasonable cost statement that doesn't really dot the I's and cross the T's, and those often get rejected. Not that doing a reasonable cost statement will automatically avoid penalties, but a well-written, well-thought-out, strategized letter can really work to help reduce or even avoid penalties. If you don't qualify for reasonable cause, for whatever reason, and or you would prefer to do something like the streamlined program because you also have other unreported income, accounts, assets, investments, you may consider the streamlined program or delinquency procedures, just depending on what your situation is. And if you're willful, of course, you would be limited to voluntary disclosure. We have lots of information available on our website, goldenlawyers.com. You can always schedule a reduced fee initial consultation if you're interested. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.